Okay, so you were saying you are an Indonesian and you started out with CIMB as a trader.
Yeah, so once I graduated, I joined CIMB Management Trainee Program, and I think I was in CIMB for about 8 years. And in that 8 years, you know, I I moved along various departments. I was a bond trader once. I was doing FX and derivative sales once, and the last post that I hold was basically an equity trading position, equity proprietary trading position. And I think I was over there for about a year or two. No, for about 2 to 3 years. Yeah. And that was basically a very interesting division. What I did then was that we use basically CIMB's money to trade on Asian equities. And it was not just like a fund manager where you just buy and invest in stocks.
Mm-hmm.
I can do various things, you know. I can go long on stocks, I can short the stocks, and I can play with the futures. I can trade on FX. There is not really I mean, it was very flexible in that sense, and we did
So
a
it's
lot
like
of.
CIMB give you money, you do whatever you like, as long as it's positive return.
Yeah, so there was just a KPI that we need to hit, and whatever that we trade on, it was pretty flexible in that sense. So yeah, so that was basically what I was doing for the past 2 to 3 years in equities trading, and subsequently after I quit CIMB. I was basically looking for things to do, and I decided to invest in this startup called Stockbit. And in the beginning, I was doing some active role in Stockbit, but I think over time I had my focus elsewhere. And yeah, so right now what I'm doing is I'm doing 3 things. I'm handling some family funds. That's basically my main thing these days. And secondly, I do help to manage Stockbit, especially in Stockbit Malaysia. And I do also have some side businesses in Malaysia, you know. Yeah, so those are basically the 3 things that I'm doing at the moment.
So you're running a Stockbit, which later you talk more about it. But number 2, you're also investing for your family. And number 3 is you also have some private business that you run as well.
Yeah. Okay. I mean, you know about my private businesses.
Yeah. Okay, so I think we can go into the topic where everybody wants to know about. Today's session will be there's not much agenda. It's just like a coffee session, and we will start now and end somewhere around 10. So first of all, let's talk about the market. Where do you think the market is heading? I know this is a very, very straightforward, blunt question, and you don't need to feel stressed like you need to be right or what. Even I was wrong a lot of the time. So just to hear, what's your opinion? Where do you think the market is heading?
Yeah, so this is the $1 million question, right? I think if you guys are in Stockbit as well, the community always asks this question as well, whether the bottom is over, is behind us, or is there? I mean, is a bigger downside coming up and all that? I personally am in the opinion that the COVID-19 crisis is already behind us, and that the bottom for COVID-19 crisis has passed. So that's my personal opinion. But I do think that whatever that was done by the government of the world, by all these bankers, central bankers around the world, I think whatever actions that have been done and whatever impact to the economy that COVID-19 has given, it's gonna be a catalyst of what is going to be a bigger wave. The next crisis. I'm not sure what is the next crisis going to be. It could be like a sovereign debt crisis, or it could be like...
So it's not going to be a health crisis, but more like an economic or...
Yeah, I feel like I'm on the opinion that there is going to be another bigger wave of crisis, but I do not know when it's going to be, right? And because I do not know when it's going to be, you might as well enjoy the ride at the moment. I mean, that's kind of like my stance. So I personally have been nibbling on very specific selected stocks. And I think that should be the way to go. I think in this current day and age, I personally believe that not investing at all is the biggest risk, instead of you being scared of investing and then feeling the big fall that's gonna come or something like that. I feel like not investing at all is the biggest risk.
Okay.
What about you?
Yeah, actually, I agree with you in the stance of not investing at all. But when do we get in? That's a question, because market is like every day it's only up. There's no retracement at all. Some stocks maybe a little bit, but you can pick any stocks. All the stocks graph look the same, just at how much they go up on it. They all fly up non-stop every day up. You want to show us something?
No, I mean, I think there were some good discussions in Stockbit with regards to this. Okay, so this is basically my personal opinion. You can actually take a look in Stockbit. But I think there was this particular sharing by a user in Stockbit, right? Which he kind of asked, is it time to buy stocks for the COVID-19 recovery? And basically, he comes up with a few of the world biggest gurus and what they are saying, right? From Bill Miller to Justin Thompson to Howard Marks and all that. Everybody has different opinions. But yeah, I think the thing is that maybe some people are saying you should actually start investing and do it in a dollar averaging cost. Yeah, I think that's probably similar stance of what I have at the moment as well.
Okay, so what I'm thinking is, yes, as I agree with you, the not investing at all is gonna be the biggest loss. And I also want to invest, so I can share with you my experience. I actually recently I invested some. Overall, I've been buying actively, but not in big amount. And because that amount is not big, and seeing the market recover so fast, I'm like, even though I bought some stocks when the market crashed, but I didn't buy a lot. Even now, I still feel missing out, even though I bought some, because I'm not fully invested. And I wanted to chase the market, but I don't know, when to get in. It's like, the other day, right, March 18, the Federal Reserve announced they are going to pump 2 trillion and then unlimited QE. What do you think about that? At first, I thought, this seems like big news. Then I see market react like it dropped that day, So it's like, maybe it's not really effective.
Right.
Then right after that, market goes up every day.
To be honest, my biggest takeaway with regards to the whole entire infinite quantitative easing and all that, right? My take on that, it would sound funny and it has nothing to do with stock market actually. But I think when that particular news come out, for me, the most logical investment then is to basically invest in a commodity that is not related to money, not related to fiat currency. And I think that was basically the trigger point for me to start investing in gold. So that was one. And that was also the part where it kind of like triggered to me that maybe I should start to really understand the fundamentals of Bitcoin. Because what happened when all this kind of like the governments of the developed nations start printing money and all that, there is just a sudden huge spike of supply in money, right?
Very, very spike of supply, yeah.
Yeah. And if let's say we are just talking about in terms of supply between like gold and between like Bitcoin and between like money. So now something in terms of like supply of money, it has gone up so much that it feels to me that the supply of a limited commodity like Bitcoin, like gold, it has become undervalued as compared to money. So that was the point that I seriously considered to buy Bitcoin. And that was basically the point that I started investing in gold. Because printing money like crazy and like no tomorrow, there has to be consequences at the end of the day, right? And I think one of the biggest consequences that could actually occur is it's going to be like a global inflation, or maybe like a global stagflation. And gold is basically the best hedge against inflation. So for me, it just makes a lot of sense to invest in gold then. So that was basically the time that I started to buy like a gold ETF. Yeah.
Yeah. So this is why I bring up this topic, because you say, the biggest mistake will be not investing at all.
Yeah.
Because if you're holding cash, like me, then when this thing is over, you feel the impact. We haven't seen the impact yet. The inflation hasn't really happened yet. It has happened in the prices of assets like share price. What do you think about
I was actually just reading a very interesting article today, right? Because a lot of people always have this comparison, like I follow a couple of Instagram about investing and all that. And a lot of people always compare that the S&P 500 is going up while, the unemployment rate is the highest ever since the Great Depression, and this and that, that there is no sync, and it doesn't make sense, right? Even like Howard Marks over here, it's what he said is that, what did he say here? He said that the stock market is inappropriately positive, which is definitely true. But I think one of the things that people also need to realize is that, and this is basically something that I read from the article today, the disposable income of an individual, especially in the United States, the article was a United States-based article, right? The disposable income of an individual is actually higher than what it was pre-crisis. And it's because of all the stimulus plans and all the help that the government is giving into like all these people that got affected, right? So there is actually more money to those people than where they were prior to the crisis. So I think that's a very interesting point as well, that because now actually everybody has more income. And it's something that is not being portrayed in your unemployment numbers and all that. But it's another interesting take into the whole thing. Because for instance, because for instance in Germany, right, I think if let's say you're affected and you're unemployed, there is just, all you need is just to submit something, and within like 2 or 3 days, there is a certain money from the government that gives that particular stimulus plan. It's going to be credited into your bank account already, and it only takes 3 days. So it's an interesting take lah.
Okay. And would you say that market is a leading indicator in terms of this? Because probably market already factor this in, and the economic indicator like unemployment is actually lagging.
Yeah, I think I do believe in the notion that the Mr. Market is always right. So yeah.
Okay. So the asset prices is going up. Likely is because Federal Reserve is interest rate is low. People are running away from bond, going to stocks, and also government stimulus giving all these people money. Okay, for me, my disposable income actually increased because I stopped paying for the house.
Yeah.
So actually, I'm not spending any money at all, at home. I'm only making money, but I'm not spending money. Somebody is asking, what is the price of the Go ETF that you bought? Hey, what is the name?
Okay, the name of the Go ETF is, one second. IAU.
IAU, is it?
It's iShares. It's from iShares.
iShares. And then there's somebody called Mr. Fluid asking, mind sharing those selected stocks that you have been nibbling on? Maybe you can share on the platform, Stockbit, what you have been doing.
Sure, I will do that. So the Gold ETF is the iShares Gold ETF. The ticker is IAU. Let me just see if I can do it here.
IAU.
This one. Yeah.
Why do
This
you
one.
prefer
It's
this one
just,
over all these ETFs?
I guess it's just the volume and liquidity.
Correlation with the gold price, is it good?
Yeah, I mean, all the ETF are pretty good in terms of correlation. And I think this one also has one of the smallest fee. So yeah, I mean, I will recommend this personally.
How
This
about
is
for
the
oil?
one that for oil. I don't know, man. I mean,
Yeah.
whatever it is, don't go on USO lah. And that's something that
That is no longer oil ETF, right?
yeah, I think USO is always it's not really a very good bet on oil, because the whole entire dynamic of the ETF, it just doesn't make sense for you. If let's say you want to bet on the US oil, you shouldn't go into USO actually. You should maybe just go directly to the futures or something like that. Don't go into the USO because the way they structure the ETF just doesn't make sense, and it doesn't bode well if let's say you're trying to go long on the US oil prices because of this thing called like a rollover. Because like the US oil, the USO, what they do is they buy the US oil on the short-term contract, and then whenever there's a certain time period where they have to roll over, and on the rollover, right, you will always see that the future prices of oil is higher than the lower prices of oil. So when you roll over, you are actually selling low and buying high. So so every time you roll over, you're actually losing money. So I do not actually recommend, if let's say you want to go long on US oil, do not go into the USO ETF.
Just go for futures. How about CFD?
Yeah, or maybe just go on CFD if the amount is not so big. Just go long US like WTI, go long WTI futures.
I think most people here don't have access or they do not know how to buy futures. How do you buy futures on this Go ETF?
Okay.
You can do via
The Go ETF is quite straightforward. You can actually, if let's say you have a Malaysian account, a Malaysian broker, you can directly buy from there. I personally also uses my CIMB account to buy my US stocks. But if let's say I would like to buy in a big amount, then I will use I'll use my Interactive Brokers account out of Singapore. Was it out of Hong Kong? I forgot. Yeah. I think Meng Teck can tell you guys about this one.
Yeah. But futures, what do you do?
For futures, I mean, right now I will only just kind of like do it from eToro. It's very easy. I personally do not go long futures, so I actually haven't really explored the options. But if let's say you just want to play for fun, or you just want to kind of trade, and not in such a big amount, I think you can easily use eToro for that. It's a trade on CFD. Yeah.
So okay. So what are the stocks you're buying out in Malaysia? I know you invest a lot into Tesla. You love Tesla. We are going to talk about Tesla later. Hey guys, if you want to learn about Tesla, you type in Tesla, guys, if you want to know about this topic. But meanwhile, we talk about the Malaysia stocks that he's talking about, that he's nibbling on. Wow.
Yeah.
Well, you bought a lot of rubber stocks, man.
No. So what I'm going to show you guys is, I think, so this is basically what I would call a watch list, right? So I think about, when was it? Like about a month ago. I have a similar kind of like interview, like a session as well. And basically I was doing that for a friend. And I think one of the questions that people ask is, what shall we do during this kind of like crisis? Like, how do you start investing in this sort of crisis? And what is the strategy or the steps that you need to do when it comes to investing in a crisis, right? So basically, to that, my answer is that first and foremost, I think before you actually invest, you need to actually build a watch list. I think that is the most important part, right? Number one is to build a watch list. You go through one by one, maybe you do like a screener or something like that, which are basically the good counters, okay? Which are the counters that's going to suffer in this particular COVID-19 crisis, which are the counters that, you know, actually has nothing to do with COVID-19, you know, that their businesses is not affected at all, but they were just sold off because of the indiscriminate selling. So they were just being sold off because people are just selling it. You know, so what are these sort of counters, or even like what are the sort of counters that benefits in this particular health crisis? So that is basically step one, is to kind of like figure out these stocks. And then step two is basically figure out the stocks that is basically healthy. They have solid balance sheet, they have enough cash to basically see the light at the end of the tunnel, and so on and so forth. After that, you create this watch list. After you create a watch list, then you study them like very hard. You study with a real bottoms-up approach, okay? Because in times of crisis, I think your best friend in investment is conviction, right? It's like, okay, I know that this particular stock is very, very good, and the price is going down, and I am very convicted about this stock is going to be very good in the long run. So even if the stock is going down, it's no problem. It's actually an opportunity for me to buy more. So the fear emotion doesn't come and doesn't get to you.
You need to really, really understand the company.
Yeah. So, well, you don't really need to understand the company, but you need to understand it enough so that a sudden shock doesn't create that fear into you. So number one is to build a watch list, okay, and number two, to study the stocks in your watch list with a real bottoms-up approach, so you really understand what the companies are doing. And then lastly is to look into your capital and to, what's the word that I want to use?
Diversify?
Not diversify, but to ration, right? To ration your capital so that you will be able to nibble over time. Maybe every time it goes 10% up, then you buy a little bit. Or every time it goes 10% down, then you buy a little bit. Or it can be as simple as I'm going to buy it every 2 weeks or every month or something like that. Look into your capital and ration so that you're going to be able to nibble into these good stocks. So that is the strategy on investing in a crisis. So on my part, personally, I have done my exercise, and I have actually seen a lot of people in Stockbit doing the same thing. They have come up with their own screeners. Some have come up with a dividend-based screener. Some have come up with a low PE ratio screener. Some have come up with a high net cash screener, and so on and so forth. Personally, for me, this was a screener that I created. I mean, the first ever screener was, let me see. Yeah, so coming to this particular screener, counters over here have been screened so that they are industry leaders. They have relatively solid balance sheet, be it cash or debt level, to withstand recession. These are companies with solid track record, relatively cheap valuation, or potentially oversold, and have high margin of safety when the general market condition resume to normal, right? So this was basically my top 40 watch list in the Malaysian shares. This was only a week after the lowest of the low. And you see that a lot of the counters in terms of total return year to date was only the glove counters that has a positive return. And all of them are like seriously underwater. Some of them, like hibiscus, was like 75% down. Some, like even CMS was like 70% down, right? Even Notion then was like 57% down, and so on. And then after that, I updated again, like about a month after my initial watch list. And this was the latest one. This was around almost last month. So this is basically my watch list of the stocks that I was going to nibble across the COVID-19 crisis. And I was lucky enough that I started to buy just on the time that I published my first watch list. So I started to buy a couple of stocks. Okay, let's see. Out of this particular 40 companies, right? I have Top Glove, I have Kosan, I have Revenue, I have Atrium, I have Tongguan, and then I have Pentamaster, I have Serba Dynamic, I have Funpack, I have Dufu, I have Homerates, I have Notion, I have Takaful, Petronas Chemical. Yeah, that's it.
Hey guys, maybe you guys can list down what stock he bought, you know?
No, I mean, so some of the counters, so these are the counters that I have been buying throughout that period. I think.
And they are for long term, right? Not really for trading, right?
No, these are for long term. Of course, there is a small chunk of these counters that I buy extra, so I trade on it. But even for me to trade, I just look into mainly these counters only, because these are the counters that I know fundamentally it is strong. Of course, from time to time, I do have like some counters that I trade because of the technicals. But generally, I would only trade. I mean, I think the past 1 or 2 months during the MCO, I've been only trading from my watch list, from my personal watch list. And why I like this particular watch list, if you guys look over here, is because number one, most of it have very strong return on equity, right? And then most of it have like in terms of net debt over market cap, all those that is in negative means they're net cash. They have cash more than they have debt. And net debt over equity. So all those that is in negative also means that they are net cash position. Some of them also have very strong dividends. Okay, and a lot of them, if you see their current PE valuation as compared to their 5 years average PE valuation, it is lower. It is a lot lower. And there were counters, you know, like Pentamaster, right? Pentamaster, when it was like trading at below 3, that was like a real bargain. You just close your eye and you just buy into it, right? And then when they were like another counter like Funpack Group, when it goes to like, I think 40 something, oh my God, that was so cheap. Just buy. Like Dufu also. It's like, these are really, really good counters. And, you know, these are counters that has net cash position and it has like super profitability. And it is trading, it was actually, it was trading very, very well. The market was actually giving it a very premium valuation, and then suddenly it was whacked. And yeah, I think, so these are basically some of the counters that I have been buying. Of course, you also need to, again, as I mentioned in the beginning, when it comes to stock selection, it has to be precise. Like you need to understand in the macroeconomic term, which counter in which sector is better than the others. So if you see, the only oil and gas company that I invested throughout the period was Serba Dynamic and also Dayang. But I was only trading on Dayang. I kind of like sold it off when it was giving me a little bit of a loss, and I thought that maybe it's not really the good time to buy oil and gas stocks yet. So I was only holding Serba Dynamic in terms of oil and gas. And I was very, very heavy on healthcare, on rubber gloves, and on technology semiconductor stocks, because I feel and I felt that these are the counters that, once the entire thing has recovered, they will excel better than the others. And I try to avoid counters like automotive and retail, and of course plantation as well, because the price of CPO is linked to the price of oil. I try to avoid definitely like aviation, AirAsia, and I won't touch those stocks.
How about Genting?
Yeah, or maybe like Genting, because these are counters that has a very high uncertainty. I cannot foresee their future as well as I can foresee some of the technology semiconductor players.
But do you think that the consumer demand because of this COVID-19 may be lower because the economic impact may be long lasting? I mean, now we actually haven't seen the bad economic impact yet, or whether there is any.
Sorry, can you come again? What's the question?
The economic impact, like a lot of people, they are not working. Those employees, okay lah. Those self-employed or businessmen, I think a lot of people are being affected, especially if they're businessmen or self-employed, very badly. So, do you think there may be a economic impact that is hiding, and once the moratorium ends, when they have to start paying for the installment and everything, we can feel the impact of the economic crash, and then after that, people may not have that much money to buy electronics or consumer.
Yeah, so all those things obviously have to be taken into account whenever you do your investment. That's why I think after building a watch list, the number 2 criteria is to understand the business, right? So maybe I'll take Dufu for example. Like your question just now in terms of economic impact and people's purchasing power, that is very, very valid reason. But will that affect a company like Dufu, for instance? Because Dufu is a manufacturer of enterprise hard disk. They are not GCY, right? GCY are a manufacturer of the personal computer hard disk. So that is definitely going to get hit. But enterprise hard disk, the thing is, enterprise hard disk is only going to be more and more, because the customers of Dufu are not your normal retailers. The customers of Dufu is like your Seagate and your Western Digital, and they actually have a lot of orders from the data centers, because the internet usage globally has actually increased, and the need for memory, the need for space has actually increased. So the data centers are actually in need of more and more memory spaces, and therefore Seagate and Western Digital actually have a ramp up of orders into Dufu because of this particular sudden spike of internet usage. So actually, Dufu is the hidden beneficiary of COVID-19, I would say. So understanding that is important, and that is why I know that when Dufu price went down, it's probably because the market do not really understand, and it's a indiscriminate selling of highly valued stocks. So they just sell everything. And I've been eyeing Dufu for the longest time. I've been really wanting to buy Dufu for a long time, but its valuation is just so expensive. And then suddenly it went down to really at the level that I thought that, it's in terms of risk to reward, I think it was good. And I started nibbling then, and every 10% it goes up, I just keep nibbling on it.
That's a really good strategy.
Yeah. And it's the same with a lot of other counters out there, So, I was just talking about Dufu. The same can be said to even like, it's not here, but the same can be said to like Top Glove and Kosan. Obviously, those are the counters that is the big beneficiary.
Maybe I share with them something on Stockbit. You can actually have the chart. Hey, so guys, why don't you guys go ahead and download Stockbit? Because in Stockbit, there's a lot of feature here. So somebody is asking what is Rondy's account in Stockbit. I think later we can share. But in Stockbit, actually, you can have the charting feature as well, right? It's better than i3 Investor because in i3 Investor, the chart is not as good, right, as this one. So based on this, right, seems like the way you bought it is really you bought at a very good price. So this is Dufu here. This is Rondy's account. You can actually at Stockbit, you can start an account. Then after that, you can write something. Then you can go to people and you can follow them. You go to Rondy here. You can click follow to follow Rondy, and every time Rondy writes something, you will get updated. You can have discussion with him here, I think, and then you can ask him question. I think there are a lot of people that will reply you as well. Here he put the Zoom link for people to join. And he talked about what K+, the rubber glove. Hey, what is this? Chandor? What is this?
So I think let me on this. Basically, as you all know today, rubber glove has gone into like overdrive, right? So why has the rubber glove gone overdrive? Meng Teck, if you just scroll down a little bit, scroll down more and more and more and more.
Riverstone, wow.
Okay, so
I really hate it, every time I, see this, like, miss out, man. I know Riverstone in and out, but I didn't buy.
Right. So for instance, Meng Teck, maybe you just click on the number 82 over there.
Number 82? Which one?
Wait, can I?
Yeah, sure. You share your screen. You want to use yours is instead, right?
Yeah, hold on now.
Sure.
So I was actually tagging Meng Teck about Riverstone the other day. This was last Friday, right? Last Friday, Riverstone was about, I think, 1.2 or something. I mentioned to Meng Teck, hey, Meng Teck, talking about valuation discount, I personally have reinvested into this counter called Riverstone. Riverstone is actually one of the few Malaysian rubber glove maker which is listed out of Bursa, and it is listed in Singapore. It is actually the 5th largest glove maker after the top 4, but it is actually as profitable as Harta Lega. And its biggest downside, it's only not appreciated by the Singaporean market. If it is listed in Malaysia, it probably would have been double in terms of
more than double, I think. Yeah, but one thing, this Riverstone, they do like clean room gloves as well.
Mm-hmm.
So would that segment be affected?
Yeah, I mean, let's see, right, Meng Teck? So after that, I did do a simple PE ROE profit margin, and then you can see that Harta Lega, everything is like so expensive. And if let's say you're looking into the ROE and the profit margin, Harta Lega, of course, is number 1, but Riverstone is a match to only Harta Lega, right? But the valuation is only at 21 times. So this was last Friday when the price was like 1.2, and I obviously tagged Meng Teck over here. And then what happened is today, yesterday it was a holiday in
Singapore?
in Malaysia, but it was not a holiday in Singapore.
Okay.
And yesterday the price went up to 1.4, and then yesterday evening the result came out, right? The result came out, and basically, if you guys can see, the revenue went up by 16%, and then the net profit went up by like 63% year on year. And this particular quarter is the best ever quarter in Riverstone history, ever since they got listed in 2006. And I think one of the factor why today's glove counters moved up like crazy is, I think there are people who is also monitoring Riverstone, and when they saw Riverstone's result, then there is basically a sudden optimism across the board in the glove sector, and they believe that Riverstone, the result of Riverstone is an indication of what is to come from all the Malaysian players in the Q1 of 2020. So that's why you'll see like every single counter also went up like crazy. But I think, after today's surge, I believe all the valuations have gone through the roof. Riverstone, I think today is still very cheap, 1.62 only, right? It went 10%. But Top Glove also went above 10%, right? Kosan is also almost 10%. Comfort and Rubberex went up about 25%. But these companies are not as profitable as Riverstone. So I personally still think that Riverstone is still a good buy. I think it can easily reach 2. The only reason why it won't reach 2 is maybe the Singaporeans don't really like Malaysians or something. Then they think that Malaysian stocks are stuff or whatever, right? Then they don't really want to buy it. But apart from that, I do not see any reason why Riverstone cannot go above 2. And another thing in mind is that if, let's say, you guys take a look into the reports, it is mentioned here that apart from robust sales growth, they also benefit from the downtrending price of butadiene, raw material of the nitrile. And this butadiene is, the raw material of this is oil. And oil price in April was the month that it saw a huge dip. So that is not even priced in Q2 yet. This is only Q1, and they are already making so much money. So I think Q2 is gonna be even better than Q1. Yeah. So I think rubber gloves, there is still about 1 or 2 quarters way more to go. I do feel a little bit scared to touch on like Malaysian rubber glove counters, but I understand why the PE ratio is so high. I think now Top Gloves and Harta Lega is trading probably 50-60 times PE, but I do understand why it is so high, because it is just in trend, and there is also you do see like a huge influx of money, of smart money that flows into these counters. A lot of the big players will definitely would want a piece of rubber glove, and the one that they can only invest in is probably the top 4 rubber glove counters in Malaysia because of the market size. Yeah, and I think the part that I mentioned over here, my last one, the one that you were laughing at just now, is that, so yeah, I saw this just now somewhere. Someone is asking, how come all the small time and loss-making glove counters like Kepler, HLP, Adventa are flying today? And then the funniest answer is, well, if the best cendol in Penang Road is not available, you buy the next store or the next store. So I guess now it comes to a point for rubber gloves counter that it doesn't matter who you are, as long as you are making rubber gloves, you're a manufacturer, there is going to be a demand for your stock. And I think that's in parts true, because when you talk to the Top Glove CEO, right, he is saying that the order book is 6 months, so they are so full, like the waiting time is 6 months. So I believe a lot of people will definitely go into one of the competitors.
Okay. So now everybody is asking, is still possible to enter? Isn't that chasing blindly all this? I think going back to Rondy's question, you still need to do your own research, bottom up. I think now you can put this into your watch list. For me, I can buy tomorrow because I've been researching this stock for a long time. I've been monitoring it, but I didn't buy it because I remember looking at their financial in year 2007, 2008, 2009, during the financial crisis. They were very, very badly impacted because they are doing clean room glove. I don't know why clean room glove is out of demand during the financial crisis, but now they venture into healthcare glove. And the reason why I'm not buying them is because they're in Singapore. I know really people going the Malaysia stock, they never talk about the Riverstone overseas one. If you buy Riverstone, it's really for long-term investment. So if you want to like goreng, I would say stick with Malaysia one. But even now, this Riverstone is showing momentum. Maybe I share my
Yeah,
screen on the chart. It's
sure.
already showing momentum. Before this, it was a bit like sideways trend. Nobody cares about Riverstone. Then suddenly fly up. After they announce the result, it's confirmed. I think it still have way to go up. At this rate, right, if they can maintain this, which I think they can maintain for another half year, I think even the P ratio, when we factor in the growth, is still going to be cheap.
Yeah.
But for
So
how
I
long?
think,
I probably won't keep this long, like at the end of the day, they are still going to compete because when COVID-19 over, right, it's going to reverse back to the oversupply situation, low margin situation, but not so fast, 1-2 year maybe.
yeah, I think there is still a year or two.
Yeah.
For that.
So, but you need to watch for it when it starts to get stagnant and bad again. So somebody is asking how to buy Riverstone in Malaysia. You can actually open an account with a local broker, maybe like with Lucas, UOB Kay Hian. Then you can just in the app. In the app, actually, you can buy Singapore shares now directly from the app. By default, everyone can. So you just need to slide to the SGX. Levi Sen asks, Rondy, are you looking at Hexa?
Yes, I am looking at Hexa. I am actually quite annoyed that I didn't buy Hexa the other day. I think coming back to one of my businesses, right, that I own, I actually own a hygiene company. And so I understand that hand sanitizers are like in serious hot demand, right? And I think one of the key ingredients of hand sanitizer is ethanol. And Hexa, being the largest ethanol producer in Malaysia, is definitely going to benefit from it. I have firsthand experience in seeing the prices of ethanol went up like crazy. So last time maybe I could like buy a 5-liter hand sanitizer drum for about 50 ringgit. Right now, I have to buy them at like 120 ringgit. Why? It's because of the prices of ethanol has gone up like crazy. So I think Hexa is definitely a beneficiary of the COVID-19. But in terms of the fundamental and like the company specific, I have yet to study it in depth. So I have nothing to say yet on that regards, actually. I need to really learn about it and then only decide if I want to buy it or not. It's just that from the time that I heard about this company, which is quite late, I don't know, yeah, I mean, I don't really know all the companies in Malaysia. Until now, the price has shot up before I managed to have time to learn more about the company. Yeah.
Randy, maybe you can show us some of the cool features on Stockbit that you personally use to create your watch list.
Okay, I think what I'm gonna share with you guys is basically a little bit about Stockbit first, the background of Stockbit. So Stockbit is actually an Indonesian fintech startup company. Hold on. Let me just show you guys what Stockbit can do in Indonesia. So Stockbit is actually like the KLI3 of Indonesia. It has the most members of community and around, I think, 400 to 500,000 users. And what it can do is, people discusses about stocks every day, and then people can just come up with a buy call or a sell call, and then if you agree or not, you can just click on it. And sometimes when people talk, then you want to understand whether this guy is, credible or not. What you can do is you can just go into their account. Okay, so this guy has a certain reputation, and if let's say whatever that he says you like, then you can give him a follow. Or if let's say this guy is always talking nonsense, then what you can do is you can block him, or you can report him and all that. By the way, this is in the Indonesian page. Yeah? So in Stockbit, there is Indonesian page and Malaysian page. And if let's say, okay, next you want to find out about a counter that you're interested in, you can go to the counter and you can see what the community is talking about this particular counter to get a feel out of it. And then once you kind of like discuss with the community, you can look into the news. What are the latest news from Indonesia? I mean, from the biggest newspaper, from the business newspaper that talks about the particular counter. And then if let's say you want to do some fundamental studies, you can also do it. You want to look into the PE ratio, you just hover around here. And then oops. Yeah, so this is the key statistics, right? And then if let's say you want to look into the financials, all you need to do is you go into the financials and it is already organized for you. Income statement, oops, sorry, 1 second. 3 is dying, hold on. Okay, yeah, so you can go into income statement, balance sheet, cash flow, over quarterly, annually, and all that. So everything is here. Say you want to see the revenue over the historical period, you just hover around it. You want to look into the profit over the period, you can just hover around it. And yeah, with all this data, and then you can also have this particular function where this is a graph for, this is basically a graph of ratios. So for instance, I want to find out what is the PE ratio of this counter in a graph format. I can have it also. So then I'm like, okay, maybe because sometimes people talk about PE ratio and they don't know whether a PE of 20 is high or low, right? People always think that PE of 10 above 10 is high, but sometimes you need to see the current PE ratio as compared to the historical average of PE ratio. So in this particular counter, Bank Central Asia, the biggest bank in Indonesia, a PE of 22, how does this fare historically? Over the past 5 years, right? This is how, in terms of the PE ratio, the graph of the PE ratio, and where does this stand in terms of average? So what you can do is look into the mean PE ratio, the average PE ratio. So the average PE ratio over the past 10 years, for instance, is 20x. Over the past 5 years is 22x. So right now, this particular bank, the biggest bank in Indonesia, is trading at the 5 years historical average PE ratio. So this is a very special, features in Stockbit. Other than that, of course, you can do your, if let's say a technical trader, you can do your charting here. We have our charting based on TradingView template. So you can do that as well. And apart from that, of course, there is this cool feature as well. It's called seasonality. Seasonality is basically saying, okay, so in the past 10 years, some stock have a very good month, So I think some stock like this, Astra International, you will see that normally in December over the past, let's say 20 years, over the past 20 years, there is a 84% chance that the stock month on month in December is going to give you a positive return. Why is this? It could be probably because of windows dressing, right? Or it could be a seasonality factor. You can use this particular feature in Malaysia as well. Yeah, other than that, lastly, you can do screener. You can come up with a green black magic formula screener, or you can create your own screener, and so on and so forth. And next, so at the end of the day for Stockbit, after you talk and discuss about the stock, after you analyze the stock, and then you decide, hey, I want to buy this stock, you can straight away just click buy into your real account, and then it will connect yourself into the securities, and you can buy the stock. So everything is like in just one platform. Community, information, analysis, and a trading platform. Everything is all in one. So that is basically what Stockbit is in Malaysia, in Indonesia. However, in Malaysia, unfortunately, we are facing some rough patches because there is difficulty in terms of having your developers in Indonesia and trying to improve the Malaysian features and all that. So we are still trying to work things out. So in Malaysia at the moment, a lot of the features that you see, which I explained, are not available. But what is available is a community. I think we have been in Malaysia for about a year and a half, and we have around 15,000 users in Stockbit Malaysia, and it's growing every single day. So it's also a place where we are trying to create this sort of like a healthy community, and where a lot of the things that you want to see on your page is controlled by you. So it's not like a forum-based format where you cannot block people, where you cannot report abuse and so on and so forth. Over here, you will only see what you want to see. You want to follow Meng Teck, you will follow Meng Teck, and anything that Meng Teck will write, then you'll be able to see. So it's a lot more controlled in that manner, lah. Okay. So yeah, I think that's probably it about Stockbit. I don't really want to market Stockbit too much. I think you guys just come and follow us in Stockbit and see if you guys can find any sort of trading ideas and whatnot. Hopefully, it's a platform that interests you, and because if you see our format, it's a lot like the millennials. It's created by millennials. The platform is created by millennials. So it's a social media-based technology. It's not like a forum-based technology. So yeah, just check it out, guys. Thanks.
And you can keep in touch with Rondy at Stockbit. Okay, so in case today you have more questions, you can ask at Stockbit. Maybe you can even, reply to Rondy's thread there.
Mm-hmm.
Okay, so I think I don't want to talk about Bursa that much because personally, I feel we have talked a lot about Bursa. Maybe we talk about some US stocks. What's some interesting US stocks that you're looking at now?
In terms of US stocks, right? I also created kind of like my own watch list. I think I shared this with Meng Teck also.
Oh yeah, you shared with me, and I actually shared with the group, and I say, this one is wow. But actually, did you send this to me? You did?
I think so.
Yeah.
So of course, in US there are like thousands and thousands of names, right? So for me, this is some of the names that at least I know what they're doing, and at least it looks like they have some interesting balance sheet and all that. Yeah, and from this particular watch list, it's still too many, but I managed to kind of like, I bought Royal Caribbean. I have sold it already, but this was just a part, because at that time, this was, I think, when was this fund? This fund is quite old. I think about a month and a half. So at that time, Royal Caribbean was trading at 25. I think today it's trading at above 40. At 25, basically, Royal Caribbean, I have been in Royal Caribbean. I love what they're doing. And basically, to see Royal Caribbean losing like 80% of its value, it's quite devastating. And I felt like it's not really deserving. So I thought, you know what, without much study into the particular counter, it's trading at 2 times PE, some more on the normal times, and so I thought, yeah, I think it's worth a bet. The only risk is it going to go bankrupt? So if it goes bankrupt, then it will definitely go slow. It will go lower. But I thought that the risk to reward ratio, how much more can it go down? It has gone down by 80%, right? So I thought the risk to reward ratio then was good. So I pumped on Royal Caribbean. I think somebody was asking about Beyond Meat. So Beyond Meat, I don't know. I guess Beyond Meat. What's the price of Beyond Meat now?
Somebody say it shoot up. Who was it asking about Beyond Meat?
So Beyond Meat price is 135, right? So over here it was only like 64. So
Wow.
it doubled already.
Wow.
Yeah. I mean, I don't really have much to say about Beyond Meat, but I think it has a very hard, it's got a very huge addressable market now, because the food industry, I think it's like a trillion dollar business. And to be somebody that is inside there and trying to disrupt it in a smallest manner possible, I think there is a big addressable market out there. And yeah, let's just see whether it's doable. But yeah, I mean, I think if Beyond Meat is run well, I think it could be quite a good counter to buy. So out of this particular, coming back to your question, Meng Teck, of course, I will always say you always should buy Tesla. I think Tesla is something that everybody should own. Actually, if you guys want, okay, I'm gonna do what Meng Teck is doing. Okay, if you guys want to have, because I did a presentation on with Meng Teck's classes, I think about a month ago. If you guys want the video, maybe you guys can ask Meng Teck.
Yeah, man. If you want the video, you let me know. I'll share with you the video that Rondy shared about Tesla. He gave analysis about Tesla as well as Ethereum REITs. So you can have the video. Just let us know, and we'll share it with you.
Yeah. I will share with you the presentation slide. I think maybe I'll send it to Meng Teck, and Meng Teck can send to whoever is interested in the slide. But this is basically the reason and basically why Tesla it could worth $1 trillion company in the next 10 years, right? It has all the competitive advantage here, from basically its vertical integration and the EV that they built to basically how they are the leader in autonomous driving. I think this chart is very, very interesting. Let me just maybe go through this. So, Tesla, ever since they got listed, the revenue has grown from 200 million to 25 billion. So that in that span of about 8-9 years, it's basically an 82% compounded annual growth rate. And this is not to say from a low base, right? Because 200 million is not a low base. How many of you can boast that you have a $200 million revenue company? So in 2011, they have 200 million revenue, and now they have built it to 25 billion revenue and an 82% CAGR. And at the same time, that during that duration, the best of your FANG, even the best of your growth stock from Facebook, Netflix, Amazon, Google, Apple, none of them even comes close to the 82%. And if let's say you compare it to their automakers, the competitors in automakers, it's even laughable. So Tesla is a very unique company. I think everybody should take time to try and understand the bullishness of Tesla. There is plenty of materials online. You can also take a look at my video, which I shared in Meng Teck's session. Yeah, I mean, obviously there are risks with regards to Tesla. One of them is Elon Musk. I mean, as much as he is smartest guy, one of the smartest guy alive, he's also a very eccentric guy. So it's risk and reward with Tesla. I mean, with regards to Elon Musk.
Okay. Aren't you worried about like the CEO a bit unstable? Sometimes with tax like share price too high.
Yeah. I mean, but Elon Musk is Elon Musk. He's like that because, I mean, it's nothing new, right? It's always been built in his character. So it's a risk that you probably need to weigh and if it's something that you are willing to take, then you take it lah.
I'm looking into another company that, the founder really likes Elon Musk, which is Square, Twitter's founder, Jack Dorsey.
Yeah.
They're also growing very fast, like 40% CAGR.
I like that company as well.
But the CEO is much more stable. So
no doubt about it.
I discovered that company too late. I only discovered it like last month. And I've been like sucking my thumb, not buying it. Well, it shot up to 70 something. I'm still waiting. But now at least I've already done my case study. I've decided I'm going to buy it, and it drops back to like 60. I'm going to buy. And if it drop more, I'm going to buy very seriously, like how you buy Tesla. But that's my pick rather than Tesla. Tesla will be, I can see the bull case, especially when they have the self-driving car that is having recurring revenue. I don't think they are just an automotive car. Maybe they don't even need to make much money from the automotive, but they're actually software company. They could be a software company.
It is. It's basically what do they call it? Internet on wheels. That's what they call it.
That's how I say it. And others really can't come closer, because the biggest thing that changed my mind was the latest earnings call when he talked about a competitive advantage, which makes a lot of sense to me. Hey, you mentioned the top 5 books for trading. One of the books, so I really like it. The How I Made 2 Million Man is a very good book.
Right. So if you guys have Instagram, which I'm sure everybody has, you guys can follow our page. I have a team in Malaysia that is extremely talented. They come up with the most amazing ideas and the most amazing infographics. So we do come up with interesting posts like this. This was posted, I think, on the 1st of May. And you see things like this and you're wondering, okay, maybe I ask you, Meng Teck, after looking at this infographics for the rest of the year, would you actually ride on the top sectors in Malaysia, or would you actually invest in the bottom and oversold sector in Malaysia?
Probably the oversold sector, but have to be really picking very, very, if investing, like I'm be holding, have to really handpick properly, and not in a big capital way. And another portion would be the one that is doing well now for trading, making short-term profit. But a similar portion will be in those like construction or even property. But the moment I say property, I want to laugh, because it's like catching falling knife. You thought it's the bottom already, then next thing you know, drop another 30%.
Yeah. Personally, for me, one of the things that I have learned in trading in Malaysia, I'm still quite new in the Malaysian market. I think maybe about 3 to 4 years. One of the takeaway is that I can share perhaps is that if, let's say, you are looking to buy something that is at the bottom, or something that you feel is of value, right? Maybe you're looking into PB ratio or PE ratio or something. More often than not, your capital will get stuck. So I personally, especially for Malaysia, I prefer to ride the uptrend wave. I prefer to be in trend. So like the tech sector has been quite bullish for the past few years. I like to ride on that. The healthcare sector has been bullish. I like to ride on that. So I feel like I work my money better than just waiting and getting my capital stuck in an underperforming sector while waiting for the market to come back. I think Malaysia has a problem in a sense that whenever you are trying to do that, it will take so long, and you will just miss a lot of the good times with other sectors.
And it will be very difficult for you as a person.
Yeah, I mean,
you feel like missing out.
Emotionally, you have your FOMO and whatnot, right? And especially right now, I also feel that, as I mentioned, going back to the first thing that we discussed, what do you feel about the market? Do you feel like there is going to be a correction that's coming up? When is the next bear going to be? Just because everything feels like it's around the corner, right? So I feel like perhaps instead of looking into one of the oversold counter and hoping that they will turn a corner, maybe you ride the trend, because you never know when this trend is going to stop and it's going to drop. Everything else is going to drop. So you might as well make some profit while you are riding the upward wave. That's something that probably everybody can think about. So although I personally still would like to ride on the top sectors, while nitpicking on some of the bottom sectors.
Okay, that's a very good closing word. It's already close to 10 now. I think I should let you go. So guys, if you want to follow up with Rondy, want to keep in touch with him, you know where to go, which is Stockbit. You can always reply to his thread or, tag him with your questions and all this.
Yeah, I mean, I can still answer. I mean, I think I still have 5 to 10 minutes. If you guys have any question, you can just shoot it, and maybe myself and Meng Teck can answer.
Shoot away, man, at the chat there. Any question whatsoever you have, you can ask them.
But yeah, do follow our Instagram. I feel like my team has done very, very well with this infographics.
Maybe you can
say that
Stockbit mine, right?
Yeah, I would think that we are one of the best Instagram page in Bursa Malaysia. At least you don't do quotes and all that. So this is a share buyback of 2020 so far. Who has the most share buyback so far this year? And this is the companies, that's all the companies. And things like this, top 10 net cash tech stocks with the highest ROE. I mean, this is all spoon feeding.
Let me follow you on Insta. Let me make sure I follow you on Insta. Not sure whether I did. Following. I'm already following. Maybe I put C first. Okay.
So any questions?
Somebody asking, yeah, you can look at the chat and you will see some questions. Somebody is saying, thank you for a very good session. Looking forward for more of such sharing session in the future. I hope Rondy will want to share more. I don't mind inviting him. It's a very good guest. Somebody is asking, hi, wanted to check your live chart have indicator of MCDX. Have you heard of that? MCDX?
MCDX, I need to check on that because I know TradingView has that. That's basically the banker's tip and all that, right? Like the big boys, the smart money and all that. I know that TradingView has that, but I'm not sure if the TradingView in Stockbit has that. So I need to come back to you on that. Yeah, let me ask my developer.
Okay. Mary Tan is asking, can Stockbit invest in US market? Oh, actually Stockbit, right? You can actually buy and sell stocks on the platform itself if it's Indonesia market, but that feature in Malaysia, not yet, right?
Not yet. I am still trying to talk to a few brokers to see if some of the brokers are okay for us to collaborate with them. But it's not easy in Malaysia. There's a lot of bureaucracies and parties involved, like end-to-end, Excel Force. You also need their permission as well.
Rondy, are you well diversified or heavily invested in a company that you see future like Tesla, or do you put like equal money in like many stocks, or you overweight on Tesla?
Okay, with regards to my portfolio, I think everybody has a different style. Some people like Meng Teck could be a value investor. I personally am a growth investor more. My portfolio and my style is I invest 50% in growth stocks. I invest equally 25% in value stock, and the other 25% I would invest in like a theme, a thematic trading, or basically just swing trading. right? So yes, the biggest portion of my portfolio is Tesla. I think Tesla accounts for about 20 to 25% of my portfolio. After that, I balanced it with a slightly an income generating stock, which even Meng Teck knows, it's Atrium REIT. So why I do that is that I like to bet heavy on high growth dynamic stocks, and somehow I kind of like hedge it with a more stable and low risk, high income yielding stock like Atrium. So I like to go aggressive on one, and I try to balance it out with a less aggressive stock on the other. So that's something that I like to do. So my biggest three positions right now is Tesla, followed by Atrium, and then the third one is Facebook. Although recently the glove counters that I have been investing is coming close to my portion of Facebook. Other than that, I think this year also I have been investing more than what I used to be. Last time I like to be more concentrated. I don't like to have more than 15 to 20 stocks. But I think this year in itself, I'm already holding about 20 stocks. And I will take like an exception to the year is because I find that there is just so much uncertainty in the market that I cannot foresee how a business is going to be today, in the future. So just case for point is the rubber glove counter, right? I'm investing in all Kosan, Top Glove, and Riverstone. Normally, I would only invest in one, the best one. But right now, I'm investing in all three. Same with like the HDD segment. I'm invested in both Notion and Tufu. Normally, I would just pick one. But because times are just so uncertain at the moment, I take comfort in diversification in the same sector. That's why I invest in both Tufu and Notion. I like Tufu because it is very specialized in HDD. I also like Notion because it has the HDD segment while also trying to diversify and move the business into various different kind of like parts, like the EMS, like the healthcare and whatnot. So that's the way I look at it. I think this is the year where I will hold a lot of shares. And another case in point is petrochemicals. I am holding both Petronas Chemical and also LC Titan. Why is, of course, Petronas Chemical, I have my reasons on buying it, but on normal cases, I would not even touch LC Titan. But because LC Titan is very much dependent on oil as a feedstock, and when the oil price has come down so much as compared to the average selling price of the polyethylene, the spread becomes so big that LC Titan becomes so profitable. I mentioned this in Stockbit, so you can actually read up on that. So suddenly the prospects and the fortune of LC Titan has overcome what was its bad agenda and bad investment thesis on LC Titan. Yeah.
Is it the same case as LuxChem?
LuxChem, yes, it's the same as LuxChem. LuxChem also have naphtha. Naphtha uses oil as a feedstock, and it's a raw material for their rubbers. So LuxChem is also a beneficiary in this entire health crisis, but I'm not sure how much it benefits because LuxChem, just like a lot of other counters in Malaysia, there is one part of the business that is gonna boom, but there is other part of the business that is going to suffer. So let's just see whether the part that is booming can ride the pain of those business segments that is going to suffer.
What's your thought on China stock? I mean, like Alibaba, JD.com.
Yeah, I like them. I personally have a small I mean, I have two stocks in China that I'm invested in. One is Tencent. I'm invested in Tencent,
Why
and the
you
other one
Nasdaq,
I'm
right?
sorry.
Why a Nasdaq, right?
No, the Hong Kong.
Okay.
700 Hong Kong. Tencent I buy. I also have another China stock called Sun E Vision. Sun E Vision is basically a data center. So I invest in data center as well because I think data center is one of the beneficiary. I actually have invested in this counter for a long, long time. I feel that data center is a much better bet rather than like a property counter because there is a use of data centers, right? Property is just property. Data center is you have a property and you own a data center. Yeah.
Okay. Anything else you want to add on before we end this session? Maybe next time we can do another live and a few weeks later or few months later to share what's going on. But any ending thing you want to share to new investors who want to do better in Malaysia market?
Well, I think if let's say I would end this is for especially for new investors is that do not be afraid to start investing. You need to actually start investing right now. Why? Because the faster and the quicker it is for you to invest, and the faster and the quicker it is for you to feel the loss of money, feel the experience of it all, the better you will be as an investor in the long run, right? I personally started investing in 2007. The first two counters that I invest was Genting Malaysia, and also because I was studying in Malaysia then, so the first two counters I invested was MMC and Genting Malaysia. Why I invested in them is because I read Adam Khoo's book. It has got 12 steps on which counter that you need to buy, fundamental stock. So these two counters fits every single 12 criteria of the screener, and then I buy them. And then the next thing I know is 50% of my profit was gone because the financial crisis came, right? But the best thing about it was during that time I invested only about 2,000 in each of the stock, right? And losing 50% means that I was only losing 1,000 ringgit. Well, back then, obviously, when I was in college and all that, it was painful. But the experience that I have from losing such a big amount of percentage return was invaluable, and I made sure that I will not make such a mistake anymore. And yeah, it becomes a foundation of who I am today. And so that's, I think, something that I would encourage everybody who's new in investing is to start investing as soon as possible. Doesn't matter if you make or lose money, just keep learning from it. The market is always going to be there. And yeah, I would also think that currently not investing at all is the biggest risk. Yeah, I think I would end it over there.
Okay, thank you very much, Rondy, for this amazing session. For those that are listening to this now, I will go ahead and cut this recording as well as the Tesla sharing by Rondy, and I will upload them to either my Facebook or YouTube. Okay, thank you very much. Hope to keep in touch, and thanks, Rondy, for the super good sharing session by you. Have a good evening.
Yeah.
Bye.
Thanks everybody for tuning in. See you.